So with that in mind, you've got a developer that wants to produce a project. What does a non-bank lender, like if you were to get into the mind of somebody who's looking at deploying capital, what are they looking for? What do they want to get out of it? Is it always just a return on investment, or is there something else that goes along with it?
Yeah, I mean, look, naturally their core, I suppose, criteria when investing the money into a project or lending it to a developer is a return on investment. That return or the pricing on that project is usually reflected by their perceived risk in that project. And the way they classify that risk, they'll take a look at the location of the security property, how sellable it is. Is it something that would appeal to the market if they need to sell? Who's standing behind that security? Who's the developer? What's their experience like? Have they done similar projects, or have they bought sites like this before? How much equity have they put into it? I can't tell you, the biggest red flag for a lender is someone that buys a site on an option, right? So they put down maybe $50,000. They secure this site with an option. It's a 2-year settlement period. So they've secured it, say, in 2019. The settlement is now happening in 2021. They haven't done anything to the site. They haven't got a DA on it, nothing. It's just let 2 years go past. Naturally, just with the flow of the market, instead of worth 5 million, the site's now worth 7 million. And then they go and ask the lender to lend against the 7 million and want to borrow up as much as they can, up to the maximum LVR. That's a red flag, because they're essentially almost asking to borrow the full amount without putting any capital in. So whilst value uplift is good, a lender wants to see skin in the game from a developer. So they will look at how much of their own money have they put into this project so far. And the reason being is exactly that point you said. They're a partner.
Yeah.
So they're looking at this as a partner. So they're going into partnership with this developer. They're saying, we're putting X amount into this. How much have you put in? Well, you're putting in none. So when times get hard, or this project maybe hits a bump, what's your incentive to just not say, oh, guys, I'm out?
That's the 50, let it go.
You guys have got the first mortgage, you guys can take over. So having a developer that's going to put skin in the game and stand behind their project is a big positive for a lender. So being able to just demonstrate that is another big thing. Pre-sales is another thing. Naturally, as I said, in the private space, developers tend to sort of look for no pre-sales options. But as a project gets bigger and bigger, even in the private space, when you start talking about 50, 100 units, unless you're putting in like 50% equity into the deal, which most developers won't do at that level, the lender's going to want to see some pre-sales that demonstrates an appetite for those units in that area.